Welcome back to the channel, everybody. Guess what happened today? $2 trillion sold off. S&P 500 down below 6,000. Crypto back testing $100,000. Why? The FOMO meeting happened today. The FOMO meeting. Just kidding, it's the FOMC meeting. But it always ends in FOMO. But that's okay, because we know that. If you've been paying attention to this channel, we talk about how these FOMC meetings are risk off. And there's always tends to be sell-offs after the FOMC meeting. So today we're going to be getting into why there was a sell-off. What was unexpected that came out of this, the market said, let's just destroy $2 trillion from the market. Get rid of it. We don't need it. Sell it. Sell it. So we're going to be talking about that. Crypto was down. However, crypto was pretty resilient in my opinion. Even more resilient than TradFi. So TradFi better watch out. I'm coming for you. All right, so let's jump into it. What actually happened at this meeting and who's Jay Powell think he is? Well, Jay Powell said something that everyone was expecting. The entire market, there was a 97% chance of him doing it, which was cutting rates 25%, which is what he did. He cut them 25%, and the market was pleased with that. But what the market wasn't pleased with was what he did next. And what he did next was he changed his outlook for 2025. And what that did was destroy $2 trillion in market cap. So this is what's going to happen. All of these people in the Fed meetings, they voted to change their outlook. They went from 3 projected cuts in 2025 down to 2 projected cuts in 2025. And the basis points that were expected to be cut in 2025 went from 100 basis points cut down to 50 basis point cut. So the market naturally is less risk on. They're more risk off, which means sell-offs not as big of an expectation in 2025. Now, is this all bad? No, I don't think so. I think it's just a sell-off from an FOMC meeting. But we'll see how it shakes out. But in light of that, I'd like to show you some tweets that I saw today that were interesting that I think we need to just go over real quick before we hop into some charts that I found to be very interesting at these times, this specific time. So if we look at the X here, it basically explains what I just said. We're talking about a $1.8 trillion market cap being erased today. And they're trying to explain why. It's because their 25 basis point cut marked 100 basis points of 2024, which is continuing the Fed pivot. However, markets price in Fed decisions well before they are announced. So that's already been priced in this 25% basis cut. So in reality, today's market reaction had nothing to do with the rate decision, but had everything to do with the Fed's outlook for 2025, which shifted sharply in the hawkish direction. As seen below, the Fed revised their 2025 outlook from 3 rate cuts to 2 rate cuts, and a total of 50 basis points, which is hawkish. And it's not as good as what they said before. In other news, Wick, really like Wick and what he talks about. He said just some weeks ago, Powell was talking hawkish, like he was going to raise rates, and the market had a slight hiccup. Now he does the opposite, cuts rates, but says less rate cuts coming in the future, and markets react by pulling back a lot. Yep. He also said, second, Powell's comment that the Fed is not allowed to hold Bitcoin reserves is really dumb. Of course it's not allowed to hold Bitcoin because no one has changed policy to allow it. There was a time before the gold standard when they were not allowed to hold gold either. Third, if expectations peel back for less rate cuts, that sets up a really healthy 2025. So here's the silver lining. We'd rather have markets be pleasantly surprised than expect everything now. Whether you like Trump or not, you know policy will be pro-business, and Gary Gensler, the SEC chair, will be fired. So we'll get regulation clarity. So that's some good tweets saw today related to this market cut. All right, let's just jump into some charts to end this video. I want to start out with the S&P 500 because I think this is interesting to look at. And I just wanted to show the 2019 sell-off and just what the rate cut cycle looked like then. So check this out. The yellow line is the federal funds rate over time. These horizontal lines, I put them in just to show significant points in time. But this is what I'm looking at. So this is the S&P 500. Last time, once the Fed started to cut rates, the S&P 500 went up for about 6 months after they started cutting rates. And so I just wanted to make that note because the Fed just started cutting rates 4 months ago. And it took about 7 months to reach a reversal or a market top before the S&P 500 actually started to sell off. So we're seeing, I don't know, we could see something similar here. We're still moving higher. Rates have been cut, but we're only like 3 to 4 months into this. So what happens when we get 6 to 7 months into this? Rates continue to fall, possibly the same scenario, but we don't know. However, something even more interesting that I saw is if you back this chart out to, you can see at the bottom, this is the 2007, 2008 area was the last time that rates were this high and coming down at this pace. Now look at that, boom, we're coming down this fast. And everyone knows what happened then, 2008 financial crisis. So I thought this was interesting. It'll be interesting to see how this plays out over the next 5 or 6 months with the S&P 500. I'm kind of looking at a topping signal around, I would say 6,500, something like that. But we'll see. We're getting green candles, and it's still very bullish outlook right now. So I wouldn't let today shake you out of anything. It still looks very good on the high time frame. And that's what we do here. We just look for high time frame trades. And we don't do that short stuff because you can get trapped doing that. All right, the other thing I wanted to show, so this was the S&P 500 and the federal funds rate. The other thing I thought was interesting was the Ethereum versus Bitcoin chart, which you can see here that there's a little bit of similarities here, which is kind of cool. So as you can see here with these same red dots, same red horizontal lines that I put in, these mark Ethereum bottoms. So as you can see, the Ethereum marked a bottom versus Bitcoin about 2 or 3 months after the Fed started cutting rates. Now look what just happened here. It looks like we're seeing a trend reversal in ETH about 3 months after the Fed started cutting the federal funds rate. Now it's interesting. You never know if this will 100% play out, but as you can see, we're under this track line here back in 2021. Again, we're under the track line here. We are seeing a reversal here after 3 months, trend reversal. And we saw one here as well back 3 months after the federal funds rate was cut. So these are just patterns I'm seeing. I don't know if they're going to play out. This is just my opinion. This is just what I'm seeing. But it could set up for a nice trade. So guys, this is kind of what I want to show you today. Market sell-off, not a big deal. We're in a bull market right now. I don't see this bull market ending until mid to late 2025. So hang tight, don't get shaken out, and enjoy the ride. All right, guys, if you like the content, hit the like button wherever you are, YouTube, Twitter. Shoot me a follow, shoot me a subscription. Really appreciate it. Helps me get the channel out, get the views going. Everything helps. So, all right, guys, we'll talk to you next time. Bye-bye.